100 basis points. So if you look at the bond right now, or the bond market, I should say, 10-year UK gilts up in yield by 42 basis points to 4.23%. And then when you look at the currency, the pound off session lows against the greenback, we're at $1.652 right now. Now, if you look at U.S. yields, we are higher across the curve, particularly at the long end. A 10-year now at 3.89. We're up 20 basis points. We heard earlier in the day from the head of the Boston Fed, Susan Collins. She said additional tightening is necessary to rein in inflation, and she also cautioned that this process will require some job losses. Dow Industrial Average right now weaker by nearly 1.2%. Many of the interest rate sensitive stock groups like real estate and utilities helping to lead the S&P lower by 1%. Nasdaq comp down about 0.4% right now. We've got crude oil weakening on the notion that we're going to see a global recession. WTI down 2.6%, 76.70. And look at the rally in the dollar, with the Bloomberg Dollar Spot Index rising by more than 1.1%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, walk around our global cities, and you're likely to see a common denominator among them. It's all in a story that is among our most read today on the Bloomberg terminal. It also happens to be the Bloomberg Big Take, and it's about New York City's empty offices and their reveal of a global property dilemma.
The story written by Natalie Wong, John Gittleson, and Noah Buhire. Natalie Wong joins us now. She's U.S. commercial real estate reporter for Bloomberg News. It is today's Big Take. Check it out at Bloomberg.com. And, of course, NI Big Take on the Bloomberg terminal as well. Natalie, good to have you with us this afternoon. Lay it out for us. If you take a stroll down 3rd Avenue in New York City, what do you see?
Thanks for having me. So we go down 3rd Avenue. First of all, we see a lot of empty retail storefronts, indicating that a lot of retailers are not moving in because there's not enough workers on that corridor. And then you also see a lot of 1950s to 1980s office buildings that don't quite compare to the new One Vanderbilt by Grand Central or the Hudson Yards skyscraper that we see across the rest of the city. So,
what does something that's 1950s to 1980s look like? Like, is it just fewer windows, it's not all glass, that sort of thing?
It's more of those glass buildings with punched out windows that don't necessarily have a lot of outdoor spaces. You know, if you go towards Hudson Yards, you see some building, the spirals going up, they have cascading terraces around the building. But these ones, not a lot of outdoor spaces, looks a little bit outdated when you walk into the lobby, not a lot of amenities.
So how much of it is like in the realm of all those reality shows, it's time for a makeover for all these office buildings? How much, though, is just a post-pandemic world and not everybody's going back to work?
It's both in the sense that right now in New York City, we have less than 50% of workers that have returned back to work, especially for 3rd Avenue buildings. A lot of tenants have rolled over leases and are not renewing them, so there's a lot of vacant spaces left. And then it's really costly for landlords to put in hundreds of millions of dollars to renovate an entire building. It's extremely hard to do that. People don't necessarily have the funds. And then on top of that, lenders may not necessarily want to help finance that either at this point.
You mentioned financing. That's a big part of this story with loans coming due in the coming years. How does that look for the office buildings that you took a look at for this piece?
Just in general, a lot of lenders are really not keen on lending on any office buildings. Some, even for Class A, let alone Class B offices that are not getting any traction at all from tenants, where, you know, landlords are struggling with maintaining costs because they have a dwindling rent roll. So it's not looking that promising for a lot of these landlords.
How much is to also a build out, like in a city like New York City? I feel like we've seen a lot of building continue, especially when it comes to commercial space. And there's just, man, if I'm looking for space, I've got options, and maybe nicer options, and options that make more sense for how people are wanting to work.
It's extremely competitive, I guess, for landlords, because you're right, there are a lot of new skyscrapers popping up. There's a lot of space that tenants have left behind, like really nice sublet space across even Hudson Yards, newly built out offices that these tenants aren't taking, and so people can, you know, have a look around Park Avenue, 5th, or Madison for what they want.
We're talking New York in a big way, but we do say this story is global, so broaden out for us in terms of what we're seeing around the globe.
I mean, this is an issue happening across every major global city around the world. In our story, you can see vacancy rates have soared from 2019 across Toronto, Frankfurt, Tokyo, and Hong Kong. It's not an issue that's just common to New York.
Okay, Natalie, I'm going to ask the question that everyone has been asking for 2 years. We have a housing crisis here in the city.
Yeah.
Converting these office buildings into homes, easier said than done. I mean, the windows don't open,
Right.
communal bathrooms on every floor. Like, it's a tall task. Is it something that
Right.
is even being considered?
It's definitely being considered. People have been talking about it nonstop, but the problem right now is there is no legislation or tax incentives that makes it doable for these landlords. It's an extremely costly proposition. A lot of the buildings that could have been converted that you've seen downtown have been converted, and in Midtown, you're full of these big block buildings that don't have a lot of sunlight or air in the core, and it's just really hard to make that proposition without having any tax or financial incentives.
So enter private-public partnerships, is that's what's needed? And I think about, you guys mentioned in your story about what happened post 9/11 in terms of downtown Manhattan, and we needed to see those private-public partnerships.
Right, we saw thousands of apartments spring up in place of those empty offices, and that's definitely something that people are talking about.
Because nobody
That's
wanted to work
desperately needed
downtown,
here.
right?
Nobody wanted to work downtown.
After 9/11.
Yeah, and it really wasn't a livable area as well, and now you go down there, it's a 24/7 neighborhood.
One of the things I think about, Tim, like during the pandemic, we all talked about, especially as people obviously had to flee their offices and then weren't coming back, are we going to see some kind of commercial market crisis as a result? I don't know that it's yet played out in the financial markets, right? We haven't
Right.
really seen it, but
No, we
I feel
haven't.
like these conversations, how could it not?
People have been talking about it for more than 2 years now, with like loans coming due, how much longer can lenders extend the timeline for people? It's unclear when that's going to unfold, but definitely there's more to come, in terms of the market balancing out.
Okay, 30 seconds. I'm wondering, Natalie, if the economy does start to turn for the worse and we do see a labor market that's a little softer, does it change with more people being asked to come into work?
I mean, I think we've definitely already seen an increase in people coming back to work, but I don't know necessarily that, people being worried about being fired is going to suddenly turn around the entire office market. There's just too much office space, and there's not enough demand.
All right, hashtag new normal. Jay Powell says it. I'm just leaning into it in a big way, right? So many different things. What a great piece of reporting by you and our team. Natalie Wong, she's U.S. commercial real estate reporter at Bloomberg News, joining us in our interactive broker studio.
Also, check this one out online because it is very interactive and you can scroll through it geographically. It's very cool. Let's get to world and national news. Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. Hurricane Ian is on the move and churns closer to Florida's Gulf Coast. Tampa Mayor Jane Castor says they're asking residents to leave now before the storm comes ashore.
Whether we're on the good side or the bad side, we're going to get some serious weather come Wednesday, Thursday.
The hurricane watch is in effect for Mayor Castor's region. Ian is already getting stronger and is forecast to move quickly over Cuba today, then build strength over the warm Gulf waters. The heavy weather is making its way toward Florida, and that's forcing yet another delay for NASA's first mission to the moon in half a century. Bloomberg's Nathan Hager has an update on that.
The space agency is returning its Artemis rocket to the hangar tonight. That means the next launch window for the already delayed moon mission won't open till late October or mid-November. NASA had hoped to take off this Sunday before the latest change. Even though Ian is expected to rake Florida's Gulf Coast, NASA says the latest forecasts don't show improved conditions at the Kennedy Space Center on the Atlantic side. It says this latest delay will give employees time to address the needs of their families and to protect the integrated Artemis rocket and spacecraft system. In Washington, I'm Nathan Hager, Bloomberg Radio.
NASA's DART spacecraft will be colliding with the moon of a large asteroid tonight to see if it can push it into another orbit. The mission is being monitored by other spacecraft like the Hubble Space Telescope and the James Webb Telescope. If successful, the technique could be used for planetary defense. The $325 million test began with DART's launch last fall. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. I'm Carol Masser, along with my co-host Tim Stenovec, live in our Bloomberg Interactive Broker studio, and we are streaming on YouTube. So great story that we just talked about, the Bloomberg Big Take, people not coming back to work, and we're seeing a lot of commercial space, certain kinds of commercial space in particular, in global cities, office space that's just sitting there vacant.
Yeah, I think a really good question that you asked was about a potential crisis here.
We keep talking about it, and I'm like, we haven't seen it played out, and it makes me wonder why, and maybe it's just, I don't know, trying to understand it. In the meantime, another story that certainly is on our radar, it has to do, we just talked about commercial space outlook. What about the outlook in general, which is, I feel like, our big theme for Tim and myself here on Business Week on this Monday. And this story talks about global financial firms, which are still smarting from multi-billion-dollar losses in Russia, are now reassessing the risks of doing business in Greater China after an escalation of tensions over Taiwan. This is one of our big macro concerns, too. Tom Orlick, I think, touching on it, as well as I think earlier we talked about it a little bit, too.
We're talking about firms like UBS, JP Morgan, Societe Generale, and more. They've asked their staff to review contingency plans in the past few months to manage exposures. That's according to people familiar with the matter. Global insurers, meanwhile, are backing away from writing new policies to cover firms investing in China and Taiwan. And costs for political risk coverage have soared more than 60% since Russia's invasion of Ukraine.
It's like you get an office meeting, you go in, there's the whiteboard, and you start writing, okay, risks, folks, and let's play it out. It's higher interest rates globally, we're worried about a recession.
And it's the second largest economy in the world as well.
Exactly. I love this quote. Mark Williams, he's a professor at Boston University, says political risk around potential U.S. sanctions and the likelihood that China would respond by restricting capital flow has kept risk managers busy. Goes on to say a sanctions war would significantly increase the cost of doing business and push U.S. banks to rethink their China strategy. And they have all been, I think, safe to say, for over a decade, if not more, all in on China.
Yeah, heated rhetoric between Beijing and Washington over Taiwan. That's unsettled firms and it's unsettled markets, Carol.
The worries, the risks, man, they just grow. All right, you're listening and watching Bloomberg Business Week right here on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The story today is the spike that we're seeing in Treasury yields across the curve. At the long end, at 10-year now at 387. We're up just under 20 basis points on the day. At the short end, 2-year now at 4.31%, higher by about 12 basis points. We heard today from the head of the Boston Fed, Susan Collins, saying that additional Fed tightening is necessary to rein in stubbornly high inflation. This shouldn't come as a surprise. In fact, you're likely to hear this theme echoed across the week. We will be hearing from 13 unique Fed speakers at 22 separate events. Now, this move up in rates has strengthened the dollar quite a bit, with the Bloomberg Dollar Spot Index up by more than 1% right now. Also important to point out what we heard today from the Bank of England, the BOE attempting to calm nerves by pledging to change rates by as much as necessary to control soaring inflation. Recall last Friday, with the tax cuts announced by the British government being viewed as inflationary, now some in the market are betting that the BOE will perhaps raise rates in November by as much as 200 basis points. That would be monstrous in terms of a size of a move at a meeting. If you look at the bond market right now, in terms of 10-year gilts, we're up more than 41 basis points to 4.23%. Dow Industrial Average right now weaker by 0.9%. Many of the interest rate sensitive stock groups like real estate and utilities leading the S&P lower. It's down about 0.7%. And the Nasdaq Composite is only off 0.1%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, really appreciate that. All right, you are listening, watching Bloomberg Business Week. Fall is here, which means a new docket of Supreme Court cases to be considered. Everything from the right to vote, affirmative action, gay rights, and even one involving Andy Warhol and Prince. So a variety of topics.
Joel Weber is the editor of Bloomberg Business Week. He's with us right now in the Bloomberg Interactive Brokers studio. Greg Storr is Supreme Court reporter for Bloomberg News. Check out Greg's story. It's available on the Bloomberg terminal and, of course, at Bloomberg.com/businessweek. It's all about the U.S. bracing for a new round of divisive Supreme Court clashes. Joel, we know the makeup of the court hasn't changed because Ketanji Brown Jackson is replacing Stephen Breyer. So it's still firmly in a conservative camp. Any surprises ahead?
Well, you're going to see more of the same. So maybe that's a surprise depending on how long you've been watching. And that was sort of what we started talking to Greg about, actually kind of like weeks or months ago now, because we saw the last term end and we knew that there was going to be this next term, and we were like, what's it going to look like? And keep in mind how divisive last time was. So what Greg came back with was basically like, boy, if you thought last time was divisive, like this time it's going to be more of the same. So Greg, tell us what you're, somebody who is all over Supreme Court coverage. We're going to see sessions resume next Monday. What are you watching for?
Well, as you said, more of the same. We're going to see the kind of divides, at least we expect to see the kind of divides that we saw last term. There may not be a single big case quite as big as the Dobbs case that overruled the constitutional right to abortion, but we're going to have a huge college affirmative action fight coming up on October 31st. There are a couple very big voting cases involving partisan gerrymandering and so-called racial gerrymandering. We've got cases involving gay rights and whether people have business owners have a free speech right to say, I don't want to take part in a same-sex wedding. All these things are the kind of cultural issues that divide the country and divide the court increasingly in a conservative way.
So, Greg, what's the one that you think is going to be probably well? To back up here, right? Like we've had this sort of court that was a little bit more balanced in decisions. What are the decisions? Of the cases that you kind of just rattled off there. Where's the power imbalance start to look like?
Well, you look at the affirmative action case, for example. That is actually two cases before the Supreme Court, one involving Harvard, one involving the University of North Carolina. And and this case takes these appeals take direct aim at a 2003 Supreme Court decision that reaffirmed that universities can use race as an admissions factor for the sake of enhancing diversity on campus, and that's something that the large majority of selective universities do. They say if you overturn that, it's going to have a devastating effect on their ability to make sure there's a significant number of Black and Hispanic and Native American students on campus. That's a case where you can see this court's change of membership, the three Trump appointees who made the court more conservative. You can see that they're very likely going to make a difference. It's a case actually where Chief Justice John Roberts, who we know in some cases has not been willing to go as far as some of his conservative colleagues, on this issue he's kind of been in the vanguard, saying, I believe in a colorblind Constitution. The Constitution doesn't permit racial discrimination, and he has suggested he sees these race-conscious admissions as racial discrimination. So, the conservatives certainly go into that case with the upper hand.
What's interesting there, though, is what we learned last time is that Roberts is maybe his own man on this court, and that you've got several justices to the right of him and several to the left. And that also, you have this line here that the court faces at least the specter of a legitimacy crisis, if not a full-blown one. Talk about what that means, the court going its own way here and sort of the American public's, reaction to that.
Well, let's start with the American public's reaction. We've seen decline in confidence in the courts, a decline in the court's approval ratings, not surprisingly, but noteworthy. That's especially with Democrats. Overwhelmingly, Democrats now say they disapprove of the Supreme Court. Over the summer, in a couple different presentations, Justice Elena Kagan, one of the liberal justices, without actually naming names and talking about particular cases, but she talked about what in her mind creates a legitimacy problem for a court. And she talked about, if you have the same issue being decided a different way because the court's membership has changed. And one could certainly think about cases like the abortion case as fitting into that category. And so when you have a justice on the court, at least raising that specter, it's certainly something for all of us to pay attention to.
Greg, I want to dive into the elections a little bit and how elections could shift under the Supreme Court. What could they do specifically to make it so state Supreme Courts have a different hand in elections?
Yeah, so there are two big election cases, and the one involving state Supreme Courts has to do with a North Carolina redistricting fight. And so let me just back up for a second. Remember, a few years ago, the Supreme Court said, we, the Supreme Court, interpreting the U.S. Constitution, don't have authority to say that voting districts are so partisan they're unconstitutional. They said that sort of partisan gerrymandering claim doesn't fly in federal court. But they left open the possibility that a state Supreme Court could say, hey, under our state constitution, these districts you've drawn are unconstitutional. And that's what happened in this North Carolina case. And now the question at the Supreme Court, and it could be a really far-reaching one, is whether the U.S. Constitution limits what a state Supreme Court can do. The U.S. Constitution, when it talks about drawing districts and setting voting rules for congressional elections, says that the power to do that lies with the state legislature. And so the question is whether the North Carolina Supreme Court kind of overstepped its bounds in doing something that only the North Carolina state legislature can do. And this issue could apply in a whole variety of contexts, potentially including presidential elections.
Well, it's pretty wild. And when you think about personality and politics and how that potentially has definitely shaped our new Supreme Court, or our latest U.S. Supreme Court. Hey, guys, we got to run. Greg Storr, thank you so much, Supreme Court reporter at Bloomberg News from D.C. And, of course, our thanks, as always, to the editor of Bloomberg Business Week, Jill Weber.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic. We together go cross-platform, TV, radio, and YouTube audiences to look at what is another volatile day, a day where we dial up the VIX and we see, well, an Atlantic wave, it feels, coming over from the UK.
I agree with you. We certainly are seeing this global pressures when it comes to the financial market. So once again, looking for some outperformance, and I found it in those Chinese stocks. I know I talk about it a lot, but it's such an important economy. Chinese stocks that trade in the U.S., we are definitely seeing some outperformance. And if we bring up the Nasdaq Golden Dragon China Index for our TV audience, for our radio audience, this index is up about 2.3%, despite a rout overnight on concerns about a global recession and despite weak demand hitting the region's exporters and materials producers. We're seeing online companies in particular, Chinese online companies, including JD.com, showing outperformance, and another group, which is what Tim is focused on.
Yeah, I'm going to stay in the region because it is tough to find areas of outperformance today, so we got to stick together. Casino stocks with exposure to Macau are actually surging the most in the last 6 months. Look at that. Las Vegas Sands higher by 12.3% right now. Wynn Resorts higher by 12.4%. In 2019, Wynn got 70% of revenue from its Macau operation. For Las Vegas Sands, that number was 63%. So you can see why investors are excited for this news.
Yeah, some big moves there, but some big moves to the downside to really drag us underwater when you look at the S&P. We've still only got 92 companies advancing on the S&P. 410 are on the downside. We're off by 0.5% and volumes are elevated. That's 36.72 is where we trade on the S&P. The Dow is off by 0.75%. You're seeing the Nasdaq just trying to cling into the green. We're up by 8.5 points, let's call it, on the Nasdaq. Big tech gets a little bit of a lift, but Russell 2000 does not. We're off by 12 points. That's 0.75% there as well, Taylor.
You really see that tilt to the downside within the individual sector levels. Take a look at the IMAP function, of course, here, and there's really only the discretionary and the staples that are in the green. Some of that feels risk on versus risk off, but everything else, Caroline, really firmly in the red. Really want to highlight the lowest in the screen there. Real estate, you're off about 2.6%. Real estate and a lot of those companies are really getting hit hard today, so we're really thinking about the impact of the rates market on this sector. Let's take a look at some of the individual movers as well. Tim, I'll be brief because I know that you mentioned these. Wynn in Las Vegas Sands, of course, is sort of those mainland tour groups are reopening, and so those are actually the best performers within the S&P 500. To the downside, I wanted to continue to highlight FedEx. This was a $213 stock just about 2 weeks ago, Caroline, before they pre-announced. You're down to 143. So the losing streak of this and the magnitude of the macro headwinds and the execution risk is certainly one that FedEx is looking at today. Chubb as well, I don't want to get ahead of myself and do hurricane talk, but you're off about 2.7% as you're thinking about what could be a Cat 3, maybe a Cat 4 hurricane, looking at maybe sort of that Gulf Coast area. So far, the estimates are coming in at about $30 billion in damages, but those are really, really early, and of course, the path could change. But some of the insurers are under pressure today.
They are, and you're so right to highlight that. Meanwhile, I mean, let's also highlight what just the pressure this particular asset puts on basically everyone and everything. Dollar bullishness. It continues to hold. This is a great chart that keeps on giving for our radio audience. We're looking at leverage funds still net long the dollar in terms of positioning. The dollar spot index continues to drive higher. This, of course, is in part why we see such weakness in the pound, why we see so much pressure on global central banks at the moment, Carol.
Yeah, and we are all thinking about global central banks. I think of the Bloomberg Business Week story about beware the hawks. We are seeing all global central bankers, it feels like at this point, pursue that higher interest rate trajectory. Well, having said that, Susan Collins, she's the president of the Boston Fed, the first black woman to head a U.S. central bank, or regional bank, if you will. She made her first public speech today, and she reminded us of the crusade when it comes to higher interest rates that the U.S. central bank is on. Check it out.
Returning inflation to our 2% target will require further tightening of monetary policy, as signaled in the recent FOMC projections. It will be important to see clear and convincing signs that inflation is falling.
And that, of course, is Susan Collins, the president of the Boston Fed. Keep in mind, we've got a lot of heads of regional banks speaking and Fed officials speaking this week. I call it a Fedapalooza, but I do wonder whether or not we'll continue to just kind of feel the hammer beating, Tim, when it comes to, hey, everybody, it's higher rates, it's higher rates.
How much tickets cost to Fedapalooza this year? It's so expensive.
Do you have your outfit? Does
Thank you for laughing, Caroline.
The performers are wild.
You know, it's interesting because Collins also went on to say that it could be possible to achieve a soft landing. It's going to be challenging, but it can be done. And she also said quite likely inflation is near peaking or may have peaked there.
We're getting some of those similar comments from Raphael Bostic, of course, speaking on the roundup of the Sunday shows. Caroline hinting that they think that they can still do a soft landing, but unemployment might have to rise up a little bit. But that really has been the debate, and I'm really curious if all of these Fed speakers can sort of reiterate what Fed Chair Jay Powell said. The first words out of his speech at the Fed meeting was, I just want to reiterate, my positioning from Jackson Hole has not changed. And so can we still all keep on sort of that hawkish narrative that inflation we have to tackle maybe a little bit at the expense of some of the unemployment?
And I just want to reiterate just how all-encompassing the UK is at the moment. And indeed what Raphael Bostic himself was saying, look, the tax cuts that you see coming from the UK maybe push the world into more likely of a recession scenario at the moment. The fact that this nation's, relatively economic clout-wise still important, but not as big as it was, still having these ripple effects that can see us have this global sell-off, particularly in bonds, Taylor, I just think for me is phenomenal.
Who's going to make fun of Carol now that Romaine's out?
I don't know.
Who's going to give her a hard time?
Maybe
it's not going to be me.
Maybe I just get a breather for a day.
Maybe well-deserved.
Well earned, yeah.
Yeah, well, speaking of hard points, I think about the OECD, right? Bringing down global projections again for economic growth. So we continue to see those numbers being brought down. I think about Jay Powell on Friday, a new normal. Like, we are looking at a very different environment, one that we can't go to the textbooks for, Tim.
It's interesting. Late last week, we caught up with Frank Sorrentino Jr., Frank Sorrentino III, excuse me. He's the chairman and CEO of Connect One Bank. It's a regional bank here in New York, New Jersey. They have a branch down in Florida as well. And we like to talk to him because he has a good gauge of what's going on with the consumer. He said that consumers and businesses are still in such a good place right now, and he continues to hear from businesses that their number one challenge continues to be finding good employees. So although we're seeing weakness in markets play out, we're not necessarily yet seeing that on the ground.
But maybe we go back to the likes of big asset managers last week, KKR, saying that is why the Fed's in a bind, because it's still such a tight labor market at the moment. People just cannot get their hands on the right people. That's why Fed policy might not actually work in this scenario. That's why we're going to see the corporate impact more broadly as we head towards earnings season.
Oh, look, it's Romaine on the phone. Oh, good job. You liked what I did today. Okay. Oh.
Where's Romaine? I'm looking around.
He is emailing in, so watch it, Carol.
All right, I'm going to keep on guard. All right, guys, that's going to do it for now. We're going to be back in less than an hour's time. Our cross-platform coverage, radio, TV, YouTube, we call it Beyond the Bell. We are going to count you down to the market close on this Monday.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yeah, we're living in different times. We're going to get back to our TV colleagues. We will count you down. We do see, though, that equity trade coming off their lows. Who are you waving at?
I'm waving at John Tozzi. He's walking by right now. He's a healthcare reporter. It's one great thing about this room at Bloomberg. If you haven't been watching on our YouTube show, you should definitely tune in.
You mean our fishbowl?
Yeah, it's a fishbowl, and you can actually see that in the YouTube show. So it's fun because everybody's walking by here, and sometimes I distract Carol by.
You never know who's going to be in the background.
That is true.
Interesting world we're living in.
It is. You and I you weren't here late last week when we spoke to Frank Sorrentino over at Connect One Bank, but he's been with us before. He's based in New Jersey.
Yep.
And I could not get him to say that consumers are not in a great place right now. He's still talking about how he's seeing health within their bank accounts, and he's still seeing the consumer being strong.
I was thinking about what you were saying with our TV colleagues, and I think as long as people have jobs and they're not worried about losing their job, they're going to feel comfortable about spending money. As soon as that starts to come undone, watch that consumer spending space.
And even if you're seeing high prices in some places, you can still, I think, find them lower elsewhere, which, I've been talking about how we've seen grocery prices go up at our local grocery store.
Yeah.
So we've been ordering online.
Because it's cheaper?
Because it's cheaper, even with a $10 delivery fee and tipping the person who delivers them. You're seeing half price for certain things.
That's a big difference.
Think about a big difference.
Amazon doing a second Prime Day, first time they've ever done it, right? And part of it is they think the cost-conscious consumer is looking for some bargains and deals, and so that's part of seems to be maybe some of the thinking maybe behind it.
Maybe they want to tap into those lower fuel prices too.
Yeah, that's a good point. All right, so certainly one of the, and that's kind of a teaser, deep tease for one of my gainers in today's session. All right, let's get back to world and national news. So much going on, and Nancy Lyon is all over it. She is in our D.C. newsroom. Hey, Nance.
Thanks, Carol. Hurricane Ian is heading toward Florida's Gulf Coast, and officials expected to build strength in the warm Gulf waters before making landfall either Wednesday or Thursday near the Panhandle. Pinellas County Emergency Management Director Kathy Perkins says communities near Tampa Bay are at risk of being totally underwater.
At 6 to 8, 10 feet of storm surge, and remember, this is like a wall of water coming in, and it will come in very rapidly, very powerfully. This could push houses off of their foundation.
Kathy Perkins is encouraging Tampa Bay residents to leave as soon as possible. The approaching storm has prompted NASA to return its Artemis rocket and spacecraft to its primary hangar, ending any chance of a launch in the next several days. European leaders are considering further sanctions on Russia following Vladimir Putin's additional military mobilization, while struggling to agree on a price ceiling for Russian oil.
Putin could further weaponize oil as he has natural gas, Ed Mills, analyst at the firm Raymond James, said in a Bloomberg interview.
There is an energy embargo on Russian oil going into Europe on December 5th. But if Putin further weaponizes energy, how much does that add to the economic concern in Europe, to inflation? How much does that add to the fragility of the U.S.-NATO alliance?
Mills said Putin is acting in desperation any way he can as Ukrainian forces, aided by U.S. weapons and intelligence, press their advantages over his troops. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
I feel like I need to sing a song. Indispensable. That's who you are.
Do we have the rights to that?
Nat King Cole. What is the song? What am I thinking of? Come on. Oh, my God. Look at that
I know
control
exactly.
room. It's like blank stare.
How did they not know this?
You know the song Unforgettable?
Yeah, Unforgettable. It's Nat King Cole and Natalie Cole did it together.
Yes. Unforgettable.
Unforgettable,
Well,
yeah.
a little bit late there, Bob Bragg, but thanks very much.
You
This
get to Google
story,
it.
I know. Sarah Green
Where's
Carmichael.
Dave Wilson when you need him?
Exactly. Our Bloomberg Opinion team, actually Sarah Green Carmichael of Bloomberg Opinion, out with a story. She says, the headline on it, stop trying to be indispensable at work.
Okay, I'll take some advice from Sarah Green Carmichael.
Yeah.
She's got a great idea of what's going on in the workplace. It's commonly career advice. Be indispensable. It's hard to argue with. No doubt it sounds appealing these days with a softening economy and layoffs once again dominating the business news. But advice that she's tried to follow for much of her own working life as well, she said it's deeply flawed.
Yeah, she says, yes, being indispensable ought to be insurance against getting fired, and getting fired, we know, horrible. Anyone who's been through even a single round of layoffs knows the anxiety it causes, the Hunger Games-ish feeling of needing to outcompete one's friends and colleagues. Indispensability seems like the best armor, but that armor can actually become a cage, she writes.
She says that sometimes an effort to be indispensable turns out an employee turns into a one-person bottleneck. If they're the single point of failure for a project, or the only person who knows how the system works, or the one employee the client is willing to talk to, it can be near impossible for them to leave, whether that's taking time off for vacation or advancing to a bigger job.
I love this. A boss might reluctantly think, hey, Janice has really earned a promotion, but we need to hire 2 people to replace her, or it's not fair to keep sending Paul to deal with the angriest customers, but he's the only one who can talk them down.
Okay, so let's say Janice were given the opportunity to move into management. Maybe she could teach more employees to be as productive as she is. Maybe she'd create 12 mini Janices. With Paul's hard-won knowledge of customer needs, perhaps he'd be better off in a new role helping to redesign the product so it doesn't make people so angry.
So here's the key point. Their indispensability and management short-sightedness, according to Sarah Green, keeps them and the whole organization on the hamster wheel. Check out this story at Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Certainly has been a day of volatile trading in the equity market right now. We are weaker across the board. Let's check in on the latest price action. Bill Maloney is at the Bloomberg Macro Squawk Desk. Hey, Bill.
And good afternoon, Doug. U.S. stocks with a bit off these session lows, but still trading in the red right now. Dow's down 291 points, was down 429. S&P's dropped 30, and Nasdaq is now off by 24. The U.S. 10 yield at 3.88%. The 2-year is at 4.31%. Gold trading down 15. Oil is in the red, but Bitcoin trading higher by 1.6%. Among the main 11 S&P sectors, only consumer discretionary and staples were in the green. Real estate and utilities were under pressure. And leaders to the upside in the Dow, Walmart and Apple, while travelers fell 3% and led to the downside. In other news, casino names rallied after Macau announced an easing of the COVID travel restrictions. Wynn gained 12% on the day. And wrapping things up, Dick's Sporting plans to hire up to 9,000 seasonal associates. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thank you for live audio updates right on the Bloomberg terminal. The function is SQUA. That is the Bloomberg Macro Squawk Desk. I'm Doug Krisner, and that is your Bloomberg Business Flash.
And we're going to catch up with our Vince Signorilla from our Squawk Desk a little bit
It's
later
happening
on.
a little less than an hour.
Yeah, exactly. Talk about the market.
Get
All right.
ready, Vince, okay?
Thank you so much, Doug Krisner. Well, our Bloomberg Intelligence team, including senior tech industry analyst Anurag Rana, out with some research noting that the enterprise spending on cloud is about $400 billion annually versus total IT outlays of about $1.9 trillion, giving them confidence that there's room to grow for leaders of cloud segments. He points out that companies, including Workday, that sell cloud applications primarily to large enterprises, may be at less risk of significant slowing in sales growth. So we've got a great individual, our next guest, who has can tell us about that.
Yeah, Pete Schlamp is Chief Strategy Officer at Workday. It's a $38 billion company. As Carol mentioned, it provides enterprise cloud-based applications. Pete joins us this afternoon on the phone from Pleasanton, California. Pete, how are you?
I'm great, Tim. Carol, thanks for having me on.
Yeah, thanks so much for joining us. Hey, when you're thinking about strategy right now, and you look out across what's happening to the companies in the S&P 500, companies in the Russell 2000, and companies that are not yet public, what do you see?
You know, Tim, what we're seeing is this continued drive towards digital transformation. That's what customers are telling us they're doing. In fact, we just wrapped up our Workday Rising conference, which is where we get 10,000. We had 10,000 people live, actually, in Orlando, HR, finance, and IT leaders who were there with us, and then another 10,000 online, which was great. And what we heard was there's this really relentless pace of change that they need to deal with, and they're looking to digital transformation to help them through it, to help them deal with, you know, as you all have been talking about so far in the show, things like interest rate changes, et cetera. Those are changes that they deal with in their business, and they need to be able to adapt quickly to these changes.
Well, so what does that mean specifically when we think about we're talking so much, Pete, about the macro environment today globally and the things that kind of are on our mind, the increased risk, worries about the economy, higher, inflation, persistent inflation. But so when you talk about this continued drive toward digital transformation, what specifically do we need to think about our world as it continues to evolve? What does that mean? And I think about investors who kind of want to know.
Well, I think that business leaders are looking at what's happening on a daily basis. Their external factors are coming at them, whether it's macro conditions, whether it's unrest in the world, whether it's the war for talent, which remains even in these economic conditions remains very high. And they say we need to be able to deal with whatever comes at us. And many companies still live in a world where many of their processes that they have are embedded in old systems, old coded systems. Some of them are even offline still. And so when they say we want digital transformation, what they want is they want to be able to move more quickly. When something comes at them and they need to deal with it. They want to be able to quickly change their business to deal with that change.
Yeah, I feel like the pandemic certainly accelerated that. And if you weren't doing it, it was a big reminder that you needed to. Having said that, in this move towards, increasingly your customers and their need for digital transformation and moving towards it, are customers, though, delaying some of the deals, their software deals that maybe they want to do with you? Are they scrutinizing all purchase decisions with deals taking longer to close? And those were the words of Salesforce's co-CEO back in late summer, applying and talking about the environment. But others, including, I believe, your company, have shared similar sentiments, given an idea. We know technology is so important to all companies moving forward, but are they slower maybe in their purchasing because of concerns about the outlook?
Well, we shared very strong results in Q2 about a month back. And what we said at that time is we hadn't seen any impact of macro at that time. But we did say we do anticipate sales cycles to extend a little bit as we go forward. Certainly for large purchases, times like this may have extra checks that are in the purchase process, et cetera. That said, where I think previously a lot of people had thought about the types of systems that we deliver to HR leaders and finance leaders as being, I'll say, air quote, back office systems, and is there going to be more of a priority on front office systems in this environment? We haven't really seen that, and I think that's kind of the factor where people are saying, you know what, talent is not a back office thing. Talent is on every CEO's front burner. The ability to replan because something changed in their business, that's not a back office thing. That's something that you need to deal with in the front office. And so, go ahead, Sam.
Yeah, Pete, we just have about 45 seconds left, but I want to make sure to get this question in. What are you seeing in terms of return into the office versus like a hybrid work environment? And I ask because the Bloomberg Big Take today is all about office buildings around the world, and specifically here in New York as well, that are remaining vacant, and a concern that what this could lead to.
Getting workers back into the office is definitely something that we hear from a lot of our CEOs. They need the systems to be able to get their employees back in the office and get them back in a way that continues to be productive for them. And so what they're doing is they're putting in place both physical systems as well as digital systems, whether that's collaboration systems, et cetera, being able to use video conferencing, but also talking together in systems like Slack, Zoom, Teams, et cetera. Those are still high priority for them.
Which makes sense to what you were talking about, this continued drive toward digital transformation among your customer base. Hey, Pete, thank you so much. Pete Schlamp, Chief Strategy Officer at Workday, joining us on the phone from Pleasanton, California. This is Bloomberg Business Week, and this is Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Monday. We're seeing stocks bounce off their lows. We'll get back to the markets in just a moment. In the meantime, one of the big macro stories, inflation.
Yeah, we're going to do a deep dive on that in just a few minutes. First up, though, we got less than a half hour to go. Time to check in with Doug Krisner.
You know, Tim, when we talk about tighter financial conditions, it kind of manifests in a couple of ways, and we're seeing that clearly today. Weaker stocks, higher treasury yields, and a stronger dollar. First, the bond market. We've got yields up across the curve. A 10-year treasury that's up 20 basis points in a day at 3.88%. A 2-year up nearly 11 basis points now at 4.31. Now, if that move up in rates has in turn strengthened the dollar, we've got a rally in the greenback against every single major currency. The Bloomberg Dollar Spot Index right now up by 1%. We've got a weaker yen, a weaker euro at 96.21 U.S. cents, and a pound that is off session lows right now at $1.699. Earlier today, the Bank of England attempted to calm nerves in markets by pledging to raise rates as much as necessary as a way of controlling inflation. Remember last Friday when the British government kind of unveiled those tax cuts? They were viewed very much as being inflationary, and now some in the market are betting that perhaps, this is an outside bet, that perhaps the BOE could raise rates next month by as much as 200 basis points. If you look at the 10-year British gilt, up 41 basis points on the day at 4.23%. Clearly a wild day in markets. Equities in the States are on the back foot, but we are off session lows. A Dow that's down 0.9%. S&P 500 being led lower by many of the rate-sensitive stock groups like utilities and real estate. S&P is down 0.8%. Nasdaq comp down 0.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much. So we continue tackling the big macro stories of our time. This is really our theme on this Monday. Recessions and, of course, inflation. Inflation alone, we've been talking about it nonstop for the better part of a year. And Tim, rising prices are hitting just about every part of the U.S. economy. We know that.
Yeah, we're talking consumers, Wall Street, big business, and more. And in some cases, they're hitting small businesses even harder. Let's dig a bit deeper into the matter now with Bloomberg's Courtney Donahoe, who filed this special report.
Small business is traditionally the engine of the U.S. economy, and small business took a big hit when things shut down for the pandemic. Now we're back open, but there's a new threat to small business. That's rising prices. Our producers, Carly Wana and Francesca Maglione, spoke with small business owners all around New York City to get their perspective.
Pizza's not $19 a pie in the morning. It'll be $22 a pie.
The allure of the work had been enough, but when we started to come out of the pandemic, we kept getting people who were saying no.
I find myself working 7 days a week, 10, 15, 16 hours a day.
We really had to re-strategize the business.
These business owners were excited to open their doors back up after the pandemic, but now inflation is keeping them up at night. As we report on Bloomberg Radio every day, consumer prices have been skyrocketing. That's reflected in input costs for small businesses that now need to eat those prices or pass them on to consumers. Cosimo Tiso says it's a delicate balance. He owns 2 pizzerias, Louie and Ernie's in the Bronx, and Cosimo and Johnny's in Eastchester and Westchester County.
For now, the biggest challenge we face is product costs. Boxes of aluminum may cost $60 or $100 now. Pepperoni was one of the biggest things. It was like $60 for a case. Now it's $120. Ricotta cheese was $30. Now it's $53. Pizza box used to be 2-3 cents a pizza box. Now they're like 30 cents a pizza box.
Our team also spoke with Leon Ellis, who owns Chocolat, a soul food restaurant that's been operating in Harlem for more than a decade.
We're spending so much more now for products than we spent before. One of the most popular dishes is lobster mac and cheese. And the lobster we use is real, authentic lobster. The price for lobster has quadrupled. We have to constantly negotiate with our vendor.
For Leon, Cosimo, and many others, inflation is the top concern. That's according to a recent survey from the National Federation of Independent Business. The number 2 concern for independent business is labor, which is also tied to prices. Managers are struggling to find good workers. And even when they do, can they pay enough?
Now your hand is being forced to bring people in And probably the job that was a $16 an hour job is now you're paying 20. A gentleman walked in my store. He says, I'm here for the job. And I said, we're starting at $20 an hour. He said, I only start at $25. That's the answer you're getting from people. They know you need them.
Many business owners have raised wages. That includes Matt Dorter. He runs Main Stages, a children's theater company that's been in Queens for about 12 years.
I just did a 25% pay increase. We went from 26 people before the pandemic that were on our roster to 42 people that are on our roster right now. That's to cover a lot of the same bases with more people. People are a lot more selective and looking for things, specifically more part-time, more flexibility.
Higher input costs are hitting everywhere. Some are eating it, but others are raising prices. Dara Roach co-runs BK Bakes, a bakery in the Prospect Heights section of Brooklyn. She has had to raise prices on things like cupcakes and cookies by about 20%.
Inflation in terms of our raw goods is really always going to affect us. But it's challenging because you have to stay competitive to make sure that your products match what is out there in the marketplace. You can't go too high, you can't go too low.
When the pandemic hit, these small business owners knew their operations would change, at least temporarily. But if that was the earthquake, they're still feeling the aftershock.
We had to learn to do business all over again. One of the most important things during that period was the ability to adjust. I never foresaw anything like that.
Leon probably puts it best. After years of uncertainty, change is now the expectation. Reopening businesses was just the first battle. Keeping them open, staffed, and ready to adapt is a continuous fight, one that after 2 years shows no signs of fading. In New York City, reporting with Bloomberg's Carly Wana and Francesca Maglione, I'm Courtney Donahoe, Bloomberg Radio.
All right, again, our thanks to Courtney Donahoe and team on that. And, you know, this really plays into so much of what we're talking about here, Tim, and that is, of course, the macro themes. And, you know, everybody we talk to, it feels like, yep, maybe potentially could we see inflation maybe beginning to peak, but it's going to be sticky and kind of stay at these high levels for a while.
I got to share my pizza place story. Did I tell you this, or were you on vacation? You know, for like the last 2 years, the pizza
No,
prices,
you've been talking about this.
The pizza price at my local pizza place, we order it every Friday night, has stayed the same. It stayed. This is Brooklyn, so it's expensive. It's $25 a pie.
Yeah.
And I kept coming in every week, and I'd say, like, I thought inflation, you know, it's not hitting this pizza shop yet. Well, sure enough, a few weeks ago, $29.
So they went up by $4.
Yeah, which is significant when you start going 25 to 29.
But what's amazing
you
is
add
how much they held
pepperoni
out.
to that, and a tip and a delivery, Carol, it's like $43 for a pizza.
Tell me
for
about
one
it.
pizza.
I know. It's like...
It's good pizza, though. It's good.
That's why we do it once a week.
Yeah, once a week.
You can't do it more than that. No, but it's very true. It's amazing. Like, you just kind of do the add-ons. But again, inflation, when they start to up the prices because of their higher input costs, pepperoni, cheese, for me, it's eggplant.
And what if we said those costs, they're not going to lower prices on a menu, right?
No, well, yeah, unless people stop buying.
Yeah, that's a good point.
Yeah, maybe on the other side. Fingers crossed. I mean, Friday pizza night, it's crucial in our household.
Ours too.
All right, let's get back to world and national news. I don't know if she's got Friday pizza night, but I know she's got a lot to cover.
Usually it's Sunday pizza for us.
Love
Nice
it,
way
love
to
it.
start the week. I like it, Nancy.
Anyway,
go ahead.
Florida's Gulf Coast is bracing for a major hurricane. Ian became a Category 1 storm this morning, but it is expected to keep gaining strength as it keeps churning north and goes through the Gulf. Brian Sullivan covers the weather for Bloomberg News.
The danger here is that it's going to come very close to Tampa as it comes up the coast. And even if it doesn't have a direct hit on Tampa, you know, say it just grazes Tampa or is just off the coast of Tampa, it can send a lot of water into Tampa Bay, and that can cause a lot of damage, billions of dollars of damage.
Bloomberg's Brian Sullivan. Some say it could become the worst storm to hit Tampa in a century. President Biden was supposed to go to Florida tomorrow. That has been postponed. Ukrainian President Volodymyr Zelensky is calling on Russians to flee after their president, Vladimir Putin, announced a partial mobilization in the war with Ukraine. And as for the ongoing nuclear threat from Putin, Bloomberg government's Emily Wilkins says U.S. National Security Advisor Jake Sullivan is keeping the lines of communication open.
Making sure that they're aware that any use of nuclear weapons will be met with what Sullivan said are catastrophic consequences for Russia. You're also hearing similar responses out of UK Prime Minister Liz Truss. She's saying that the UK, the US, and other allies shouldn't be listening to Putin's saber-rattling and bogus threats, and she encouraged allies to remain together.
Again, Bloomberg Government's Emily Wilkins. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons with the Sunday Pizza Night. Really appreciate that.
Nice way to start the week. No Sunday scaries when you have pizza night.
No cooking on Sunday.
Yeah.
Right, just order in.
Yeah.
I don't know. It works for me.
You know what? If there was only one thing I could eat for the rest of my life,
Would be pizza?
It would be Italian food.
It's fantastic.
Yeah.
Northern,
It
Southern.
doesn't matter.
It's all good.
Pizza from Brooklyn.
I know.
Even pizza from Washington, D.C., if I can eat it with Nancy Lyons.
That's a good point.
Yeah.
Yeah, I would sit down. A little glass of red wine. Okay.
What are you talking about?
I don't know. Let's talk about
Amazon?
Yeah, a little teaser for one of my gainers today because we did see actually a lot of the big techs. Some of them.
Apple's higher too.
Yeah, right?
Yeah.
With some momentum.
Meta Platforms is down. It's the worst. Sorry. I'm sorry.
No, but I feel like it's the fundamental story there, Meta. They're just trying to figure it out.
Yeah, I think so too.
So let's talk about Amazon. Check it out. They're going to hold a second Prime Day sale. It's going to happen on October 11th and 12th. What are you laughing about?
It's Prime Day.
So, no, it's Prime Days.
Yeah, well, it was Prime Days over the summer when it was like a 48-hour or 72-hour event or something.
Well, apparently they're doing this to boost sales among cost-conscious consumers who are expected to start their holiday shopping even earlier this year. This marks the first time that Amazon has hosted the event twice in the same year. I put a little note to myself. I was going to share this with our TV colleagues later, but I'll give you a little bit of a preview.
Okay.
Is this jumping the shark?
Yeah, it is completely.
Right?
Yeah.
I'm wondering.
A third of consumers said that they would begin their holiday shopping in October or earlier, according to a survey from Bankrate.com. So they want to get consumers shopping earlier and shopping more. Retailers bracing for a lackluster holiday. It's going to require deep discounts to move a glut of inventory. Deflation, Carol?
What do you mean?
If it's deep discounts to remove a glut of inventory, that's good for prices.
Exactly. Like could the consumer be in the driver's seat again? Or, Amazon puts out these great deals, or many would say some great deals.
Yeah.
And so if you're looking to save some money, you might jump on this.
All right, so
Why are
it's
you
going to happen in
smiling?
15 countries.
Yeah.
Because it's still September, so, not time to get holiday shopping yet. But it is less than 100 days to go to Christmas.
When Amazon did this in July, it boosted online spending in the U.S. by 8.5% to $11.9 billion.
Wow.
That's a bit of juice, if you will. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We're fewer than 13 minutes away from the closing bell. The equity market is down. We are off the worst level of the day. Certainly has been a day of a lot of volatility, and it's really been about rising interest rates. Early in the session, the Bank of England attempted to calm nerves by pledging to change rates. Read that to say that they would move them higher as much as needed to get soaring inflation under control. You'll remember last Friday when the British government announced those tax cuts, they were viewed by the market as being inflationary, and that triggered a lot of speculation that the BOE in the month of November will have a supersized rate hike for us. Some are now speculating it could be as much as 200 basis points. That, though, probably unlikely. Nonetheless, if you look at the yield on the 10-year British gilt, 4.23%. We're up more than 41 basis points on the day. Sterling weaker against the dollar, but we are off session lows right now at $1.07 pretty much. In terms of U.S. Treasury yields, up across the curve, a 10-year at 3.88 with a gain of 20 basis points. 20 basis points? Yeah, 20 basis points.
Was it 20 basis points?
It was 20 basis. Okay. That's a big move. I can't believe I just said that.
I know.
Jeez.
Sorry.
Do you like interrupting?
Yeah, totally. That's my husband.
2 years at 4.30%. We're up about 10 basis points on the day. In terms of equity market action, the Dow is down 0.7%. S&P 500 weaker by about 0.6%, and the Nasdaq Composite weaker by just about 0.2%. You're funny.
We love you.
Yeah, I do.
Wait,
I love you too.
Again?
Thank you.
Yeah.
All right, that's going to do it for your business flash, Carol.
That's Doug Krisner. Really do appreciate that one, Doug. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Securities and Exchange Commission Chair Gary Gensler has taken on many daunting and important challenges, from regulating crypto to improving corporate disclosure on climate risk. So it's good that he's decided not to waste his time and political capital on a much less useful quest, banning payment for order flow. Gensler had suggested earlier this year that the SEC might consider ending the practice, which has enabled the era of commission-free trading. In theory, such reforms might have had advantages, but the potential benefits were minimal, and the risk of unintended consequences was significant. The SEC was right not to upend the stock market for uncertain rewards. For now, its limited attention and resources can be better deployed elsewhere. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
You are listening to Bloomberg Business Week, and it is just about 10 minutes away from that closing bell. Carol Master along with Tim Stanovic. We've got that perfect guest to talk about the market trade. I'm really curious about what he says about some of the macro trends that are out there.
Let's get right to him. Alan Lance, Director of Research at LanceGlobal.com, also President of Allen B. Lance and Associates, joins us right now on the phone from Toledo, Ohio. Alan, good to have you back with us. How are you?
I'm doing well. Thanks, Tim.
Okay, so we have tested and gone below the lows of earlier in the summer, or June, I should say. And now you have some strategists out there like Mike Wilson saying that we could go down to 3,400 or 3,000 on the S&P 500. He's over at Morgan Stanley. What are you seeing ahead for this year?
Yeah, I think a lot of people, because we've been negative starting the year, and when we talked last month into the rally, a nice rebound from June and August, we said that we'd use that as a way to reduce exposure and risk for those that didn't sell last year at this time. Even though the market's plunged, since then, we're still not buying. I still see there's a ceiling on valuations. There's too much uncertainty out there. I think you're going to get these negative as far as forecast now, my thought would be, what were they saying a year ago more than what they're saying today? I think that's what, as far as the smart investor should really look at. But, we'd be on their side right now as far as being negative, but we're far less negative than we were at the beginning of the year. If we get a big pullback, sell-off into October, we'd actually be buying very
What's a
similar
big
to what we
pullback?
did in June.
This isn't a big pullback?
Yeah, because let me just throw out some numbers. The S&P is down more than 10% since September 12th, the past 10 trading days. Nasdaq 100 down about 11% in that time frame. And then if you go to another, what I would deem maybe another key market point, the high before September 12th, which was mid-August for stocks, S&P is roughly down nearly 15% since August 16th. Nasdaq 100 is down more than 17% since August 15th. So what would be more significant to the downside?
Well, we're pretty much where we were in June, and so we had a rebound. I think it was artificial. People thought inflation was cured, and was behind us, and we talked, that's definitely not the case, and that's why you want to reduce risk. Now we're back to where we were in June. The things we were buying in June, getting into Goldman, around book value at 270s, Cheniere at 120. They're still above that, even though they're, with this latest sell-off, getting close again. So that's what I mean. If we saw a continued sell-off and those quality companies fell back to ranges that they were in June, then we would, buy for new clients or for investors that didn't take advantage of the sell-off. But it's a matter, just like in the beginning of your Carol, being in the right areas. Energy has been good. It's fallen back, so that would be an area that we would get into a further sell-off.
Hey, Alan, I put out a Twitter poll, pretty basic, not any kind of high econometrics going on or SDIs or whatever, but I said financial market capitulation is close, not close, no clue. And about 38% said it is close. Do you agree, or what would denote market capitulation in your view, Alan?
Yeah, that's the problem. Is if everybody's expecting it, and there are more, negative, bearish investors now than there has been, in any time in recent history. And, so some of the technicals are looking to a point where, you could see a bounce back and what have you. But I'm just saying the earnings is just so uncertain. So if you have, one part of the price earnings ratio that is so uncertain, it's really hard to value. And I think that's where you're not going to get any kind of, surge, sustainable surge in stock valuations, until some of these uncertainties clear. And that's where, we'd be buying into weakness accumulating for the long term. Nobody knows where the bottom will be, but it's just a matter of, we're getting close. So to answer your Twitter poll, I think we're getting close. Whether we get a big dramatic sell-off, and that's the capitulation everybody's looking for, or whether it's just a sustained drop. I think we would be buying into this. Where 2 weeks ago we were saying, I guess a lot of the media were surprised we weren't buying, and we were saying, we see a further plunge. We've seen a good plunge the last 2 weeks, and I don't see anything to turn it real quick, but we're definitely getting close, and we might not get the capitulation, but buy quality. And I think a year, 2 years from now, you'll be happy you bought those areas, and who knows, where the bottom will be. We've never been good picking the bottom. Even in 2008, we bought around end of November, and the market went down another four months before bottoming. So, but it was the same kind of rationale as buying Goldman at book value, and that tends to, pay off if you have a long-term perspective. Cheniere the same way. We like natural gas. So the areas we're buying, I think, will do well, and it won't be as bloody as some of these highfalutin areas that still have risk to them, even though they might be down 50%. So I guess the main thing for listeners is, just because something's down 50% doesn't mean it's a bargain, and I think that's where
it could always go lower.
You're saying this on a day where we're seeing another 52-week low, a fresh 52-week low for Facebook, down to 2019 levels. Hey, just 30 seconds left, Alan. How long do you think we're sort of going to be in the midst of all this uncertainty, at least with the markets? I mean, do you see this lasting another 4 months, another 2 years?
I see it at least through the midterms, and there's just too much uncertainty. And if clears things up a little bit, then you could see some stabilization. But if it doesn't, then a lot of it will be predicated on Russia, Ukraine, and some of the geopolitical aspects that are still overhanging us. So yeah, it could be a while, but nothing I see before at least midterms, if not beyond that.
Wow.
Yeah, the macro risk basket feels like it's pretty full at this point. Hey, Alan, thank you so much, as always. Alan Lance, he's Director of Research at lanceglobal.com. He's president of Allen B. Lance & Associates, joining us once again on the phone from Toledo, Ohio. Just a few minutes left in today's trading session. We're definitely bouncing off our lows when it comes to the equity market, but down the most on the Dow. It's down about 0.9%. All right, time to head over to our TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg Television, and on YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, counting you down to the closing bell, here to take us beyond that bell with a global simulcast. Carol Massa, Tim Stenovic, we bring together, of course, our Bloomberg TV, radio, and YouTube audiences worldwide to discuss what was a worldwide volatile day, Carol. It was all started by the UK, the asset sell-off, and it spilled into U.S. trading.
Yeah, really a very big, obviously, UK story, big macro story in terms of how it impacts the global trade. I've been watching, Caroline, you mentioned this, the volatility index, the VIX, up almost another 2 points today. So we continue to see that trend higher, still off of 40, not even close, but hitting above almost 33 today.
No, we just spoke to Alan Lance over at Lance Global, Director of Research and President of Allen B. Lance & Associates, and he said he sees uncertainty at least through the midterms, but still buckle up. Although he did say that if you find quality names right now, you're going to be happy in a couple of years. And he brought up Goldman Sachs, for example, companies that he was buying at book value.
Too, right?
Cheniere as well, yeah, when you think about natural resources. So he's buying a little bit, but he's being very picky.
Caroline, I know that you had earlier talked about some of the technical pressures today. Remember that mid-June low on the S&P was 3666. We're at a 3654 as we think about sort of taking out again some of those big June lows after last week, another 4% down week, and the pressure that is on sort of the broad-based narrative of these equity markets.
It does feel like we're selling into this close at the moment. Volumes once again picking up about 16%, but we are overall seeing the pressure on the bond market just absolutely eye-watering on the day when you think that yields just seem no end in sight in terms of pressure. We're now up 19, let's call it 20 basis points on your 10-year yield at the moment. I mean, the only upside, I suppose, is that for once we've got a little bit of curve steepening on our hands, but still a 2-year sells off by 10 basis points. That's 4.31 on the 10-year. And we're looking at the S&P off by 37 points. A big fat round 1 percentage point knocked off the S&P. And as you say so rightly, Taylor, we are taking out that June low that was hit back in mid-June, and indeed not an intraday low, but still a closing day low.
And the lowest now since December 2020 on that S&P 500.
Indeed, the all-country world index is at the lowest since November 2020. We are seeing some big cross-asset sales, but we see big tech under pressure by 0.6%. Your relative outperformance, the Dow was off by 1.1%. That's 325 points to the downside. We're now just at 29,000 at the moment on the Dow. And the Russell 2000 also some of your underperformer on the day, Carol.
Yeah, and also in terms of underperformance, that commodity space, we saw a headline crossing the Bloomberg a few minutes ago, the Bloomberg Commodity Spot Index falling to its lowest in 8 months. So it does make you wonder about some of the pressures that we're seeing and what it tells us, Taylor, ultimately about the global economy.
Unbelievable seeing those June 14 wipeouts. Of course, again, reiterating below that 3666 level, the significance of that, the classic sort of retesting of that sort of on the major indices. Carol, when we dive underneath the index to really try to understand what is going on within these markets, it was, again, sort of a broad-based sell-off kind of day. There were only 4 sectors within the S&P 500 that were green. Some of this looks a little bit inflationary, right? Food and staples, household products, those were sort of the winners on the day. Everything else is unch and even lower. Let me just take you down to what's really interesting, Carol, when you think about the losses on the day. It's banks, it's insurance, and some of these financials with sort of further yield curve inversion as we're really thinking about the duration and the magnitude of yields rising. Utilities, energy, real estate as well. So all of those rate-sensitive sectors, Carol, really under pressure today.
Yeah, a really important tone, certainly to the markets today. All right, let's get to some gainers, folks. There were were some names that did outperform in a big way. Tim talked about it. I think Taylor talked about it earlier. The whole group did, and that is the casino sector. And number one in the S&P 500 on this Monday, we're talking about Wynn Resorts. This stock up just about 12% in today's trade. Las Vegas Sands also a top performer. What is the big macro story when it comes to that? This is the Macau casino stock story, which surged the most in 6 months. The city announced plans to welcome back tour groups from mainland China as soon as November, so that would be a big plus to those global gaming companies. Amazon, also an outperformer, up more than 1% in today's trade, saw a rebound really in some big tech earlier in today's session. We saw a big sell-off, of course, Friday, but a little bit of a rebound today. Amazon planning a second Prime Day to boost sales among cost-conscious consumers who are expected to start holiday shopping even earlier this year. So again, Amazon an outperformer. And then some of those large-cap Chinese internet stocks, also some outperformance there. And this, we saw online travel companies, and that played into the online Chinese space because of those possibility of shortening quarantine periods for travelers to Macau. So JD.com up almost 2%. PDD, also Pinduoduo, also among some top performance in today's trade, Tim.
All right, you had a harder job today, Carol. I had a pretty easy job finding decliners on this day. But let's start with the one that weighed down the S&P 500 and the Nasdaq 100. Another day, another fresh low for Meta Platforms, now trading at $136.37. On a points basis, the worst performer in both of those major indices, now trading at its lowest level since January of 2019. And Taylor, you mentioned that rate-sensitive groups were lower today, real estate among them, dragging real estate down. American Tower Corporation down 3.2% today, fresh 52-week low for that company. And in fact, in the S&P 500, 120 companies did hit a 52-week low today. And then AMC down 14.5%, shares just absolutely cratering today. The company filed for a potential sale of up to 415 million of its APE equity units. This is its preferred stock unit that started trading back in August. Shares down about 25% just in the last month.
And it was an interesting note that I've seen lots of people on Twitter just saying, like, is the dollar index basically the new AMC? When you're looking at what it looks like on a GIP basis, when you look at the volatility in FX, when we see that the dollar index is up basically a full percentage point in the moment. And we're seeing that strength in the US dollar just leaving carnage in its wake for the rest of the global currencies at the moment. When you see a Kiwi, a New Zealand dollar, off by almost 2 percentage points on the day. When you see a Swiss franc, a usual haven trade, weakening by more than a percentage point. The Canadian dollar, the loonie, weakening as we see in sympathy the overall oil market fall as well. Norwegian krone getting beaten up for the same reason with oil on the downside. And dare I even mention, a record low for the Great British Pound that fell at one point as low as 1.03. We're at 1.069 at the moment, but no Bank of England help. And of course, that is why we see just seismic moves in this bond market that leaves you just breathless. A UK gilt, a 30-year, that sees a yield push up by 50 basis points on the day. That's what dictated the cross correlation today. That's what dictated oil falling, equities falling, S&P 500 hitting its lowest since December 2020 when you see WTI crude, Brent crude, and indeed most metals lower as well, Taylor.
Caroline, I mean, I'm showing a board of U.S. yields, and I hate to take the backseat, but it really was about your U.K. yields as well. As you just mentioned, what 80 basis points in 2 days, biggest jump on record means, and then the whole push, and then the sort of the reaction function of the yields in here within the U.S. We'll highlight a 2-year yield, Carol, because we had a really interesting conversation with Liz McCormick saying a 2-year auction that's weak because why would you buy a 431 when yields are just going to go higher tomorrow? 13 straight days of yields rising on a 2-year yield, a record streak that we have had. Massive gains, the duration as well as the rate of change on that. And then quickly, I'll just highlight a 10-year yield as well. Another 20 basis points higher on the day, a 390. So how are we thinking about the significance of 4% further out on the yield curve and really what that means for the plain math for these equity markets?
No, it's a really good point, right? The valuations. And this is something we talked about with Gina Martin Adams, that despite seeing valuations that have come down to the majority, I think, of stocks, she said, by various metrics, you know, down below pre-pandemic levels, that there is probably more room to the downside, especially in this current rate environment. And this is something, right, guys, we've talked about so much. What is the high point when it comes to yields? What's the low point when it comes to stocks? You know, when is market capacity capitulation. I have a little bit of a Twitter poll, and I said financial market capitulation. It's close. About 34% believe that's the case. So, this is the thing that we've got to figure out based on all the metrics that keep coming at us on a daily basis.
Yeah, it makes me think of one of the most read stories on the Bloomberg terminal right now. It's all about the $5 trillion cash pile that managers have that's just waiting to be deployed right now. And when you start to see rates that are and yields that are actually, providing finally a return on that cash is starting to actually look pretty good.
I mean, Liz McCormack came on and joined us to discuss exactly that story. I'm sure she did with you guys as well. And it's interesting. She's saying, look, the catalyst really has to be the Federal Reserve making it clear that the pivot is actually here, that we are seeing an end to the rate hike spectrum for us. And that feels no end in sight when we're likely to see, well, inflation still very elevated here in the US. We're going to have record higher inflation over in Europe once again at the end of the week. And we're going to see once again this sort of continuing effect of inflation and the impacts on central banks worldwide.
Let's talk about that with Mike Wilson saying that dollar strength of this magnitude sort of always ends in a crisis. What does it mean for a Fed? What does it mean for the equity markets? Is this, at least for now, exactly, Carol, what the Fed wants to see? Tightening up those financial conditions, pushing down equities, pushing down sort of those other ways to measure sort of wealth and just loose financial conditions, but a conundrum that we'll be keeping our eyes on with Mr. Mike Wilson.
Yeah, the mega conundrum, though, is inflation is sticky, right? Until that starts to come down, we know that global central banks are going to continue to be on their crusade to fight it. And so that is our macro environment. All right, guys, that's a wrap. That'll do it for our cross-platform coverage on radio, TV, and YouTube. We will see you again, same time, same place, beyond the bell. We'll count you down to the market close on Tuesday. That's tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You got to turn your mic on, Carol.
I have so many papers
Did
here.
you not? The button's not there because she has a stack of papers covering the turn the mic on. You want to talk to Vince, right?
I was like scurrying through. Yes.
We got to talk to Vince.
Absolutely. We want to stay with the markets because rightfully so. That is, what is front and center here as investors continue to deal with all of the macro trends and stories that are out there. So let's get to it with Bloomberg Global Macro Strategist Vince Signorella. Vince contributes to the Global Macro Squawk, a real-time curated news that is audio streamed across the Bloomberg terminal in real time, just commenting on everything in the markets. You can find it at Squawk Go on your launchpad. Vince Signorella, so good to have you here with us. There's today's trade, and then there's the trend in the trade that we've seen over the past couple of weeks. What's most notable to you?
Well, the trend, is just there. Let's face it. Every opportunity, bulls seem to get to lift the markets up. It fades after a very short period of time, and the sellers come in and finish it off, and it just never seems to catch any legs. It's rare that we're closing on an up day in the last couple of weeks in this market. Looks like it's going to continue. However, I point to data coming out tomorrow. And once again, all of the data pretty much for tomorrow is forecast to drop. So we are seeing it. It's just the Fed isn't buying it.
So, okay, if the Fed isn't buying it, what do you mean by that?
Well, we got Fester, sorry about that, Freudian slip. Mester of the Fed coming out right now and just hitting the tape and saying further rate increases will be needed and policy needs to be restrictive. So,
but is it because of the labor market? Because everything else seems to be loosening.
Well, and I guess it's the labor market, although the labor market is a lagging indicator. Why they're spending so much time on that and not everything else. We saw the Bloomberg Commodity Index headline about maybe 30 minutes ago hit the tape, dropping to an 8-month low. There is not an inflationary pressure situation that we had seen 6 to 12 months ago. And I honestly just don't know what the Fed is after. The only thing it seems to me, as some traders have pointed out, is this credibility issue that they're afraid that if they push back and say we're going to pause now, that the markets will take that as a hint to go, hog wild a bit and then potentially push inflation back up again, and they will feel like they've lost the handle on it. I think that's a poor reason to do what they're doing, but, I'm not on the Fed.
Yeah, no, I get it. And we had some comments from Jay Powell on Friday about this new normal that we are in. Having said that, Vince, I know you have come on with us several times and talked about really the need for the Fed to stop, right? And even start to think about cutting rates. At this point, though, how do you explain, though, the stickiness of inflation and why the Fed shouldn't continue to raise rates to make sure that they can bring it down?
Sure. I mean, inflation is no doubt sticky because we're only about 8 months, 12 months from where it's really started. You have to give it a chance to work its way through, especially the monetary policy the Fed has done. We've seen it in home sales. We've seen it in commodity prices. I mean, oil's I think 45% off the highs. I mean, it's still higher. You know, with gasoline prices are still higher than they were in the midst of the pandemic, but can you really compare it to the pandemic? I mean, that doesn't make a lot of sense to me. So I think you need to go back on a moving average over the last 5 years and see where prices are. And I think you'll see that they are coming back to the norm. And the Fed really needs to give the markets an opportunity to do the job themselves. It doesn't need to be hit over the head with a stick by the Federal Reserve, you know, on a constant basis, raising interest rates to levels that probably aren't necessary.
So in terms of, as you blog and you write, I mean, what jumps out to you among the conversations traders are having? We've just got about 30 seconds or so left.
Well, one of the big conversations is about the dollar and the potential intervention, which I don't think we're there yet. So, you know, that's going to be a ways away. That my guess is we probably need to see sterling through parity before that we get the attention of coordinated intervention from central banks. But you know, traders are they're looking for a bottom. They're looking for opportunities to buy. It's just not there yet.
Hey, Vince, it's your lucky day. They gave us 3 more minutes with you.
Yeah.
Okay.
You better go buy a lottery ticket, man. This doesn't happen. Usually they're like, wrap.
Usually chasing me away.
So, Vince, we're seeing, you know, new lows for the S&P 500 today. We're going to start to hear from companies in the next few weeks as we wrap up the third quarter of the calendar year.
that's what I'm looking at, and looking at, these are indicators that, the market is basically, or the economy is basically saying to Fed, whoa,
yeah,
take a deep breath and let's see what this is doing for a while. You can always reactivate a rate hike cycle. Just because you pause it doesn't mean it's the end.
That's true. That's true. That's a really good point, right? If you're data dependent, you can certainly go back and forth. I look forward to that rip your face off kind of rally when the Fed stops raising.
Then you can look at your 401k again, Carol.
It's a technical term.
Yeah.
Who knew? Vince Signorella, thank you so much. Bloomberg Global Macro Strategist, Vince Signorella. Find him at Squawk.co and his commentary on your Launchpad.
All right, let's get over to Doug Krisner for really an assessment of where we landed today.
Well,
Doug. Hey.
I would say to Vince, I mean, the Fed has got to preserve its credibility, right? There was so much criticism that they missed the mark and moved behind the curve. You remember the conversation around transitory inflation? That never happened. Now, you can make the case as well that the tighter financial conditions that we saw today, vis-a-vis weaker stocks, higher treasury yields, and a stronger dollar, that's exactly what the Fed wants to see. What was maybe a little more alarming was the reaction that we had in the UK, where the Bank of England tried to, but maybe failed to calm nerves by pledging to raise rates by as much as necessary to get a control of inflation. They're still trying to mop up, so to speak, from the tax cuts that were announced last Friday by the British government. I think it's fair to say they are being viewed as really inflationary. And now some of the market are looking at the BOA making a supersized rate hike in November. 200 basis points was talked about today. That may be a bit of an outlier. Nonetheless, if you look at the yield on the 10-year gilt, up 41 basis points to 4.23%. We had U.S. rates across the curve moving up, a 10-year up more than 20 basis points. We're at 390 now. 431 on the 2-year. The equity market very much on the back foot today. The Dow down 1.1%. S&P dropping to the lowest level since December 2020. We were down about 1%, and the Nasdaq comp weaker by about 0.6%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Mr. Krisner, thank you so much. Carol Massar, Tim Stenovic, live in our Bloomberg Interactive Brokers studio, streaming on YouTube as well. We have spent a lot of time today, and rightfully so, talking about the big macro themes and realities facing our global economy, and we see it playing out, of course, in the financial markets. What we find, though, always helpful in understanding our world is checking out what is going on in our global cities. And today we zero in on the 14th largest city in the United States.
That is Columbus, Ohio, and we're very pleased to have with us this afternoon Mayor Andrew Ginther, the mayor of Columbus, Ohio. He's live with us in the Bloomberg Interactive Brokers studio. Mayor Ginther, how are you?
I'm doing great. Thanks for having me.
Good to have you with us.
Yeah, it's great to be back in person, right?
Yeah, it really is. It's nice. Give us an assessment on what's going on the ground in Columbus right now.
So many great things. We've had a couple of incredible years with respect to economic development, job creation. Obviously, a lot of focus is on Intel and the huge impact it's going to have there. But if you take a look at the last 10 years, the economic growth and job creation, great companies, Google, Hyperion, Facebook, and obviously Intel, really is helping to drive not only Ohio, but the nation's economy, and really excited about the future of growth. We want to be the most prosperous region in the country, but we want that to be dynamic and inclusive. We want the growth and the prosperity to really involve everybody.
You and all the other mayors across the United States, tell me, what is it about you, and I was doing a little bit of research, that you guys have never seen a dip in your population since its founding. What is it that continues to bring people there? And what do you think about in terms of strategy to make sure that that doesn't change?
You know, I think it's because we're really committed to being smart and open. We want to welcome the best and the brightest, not just from around the state, but the country and the world, a place that is welcoming, accepting, that we embrace our diversity. You know, we have a 100% score from the Human Rights Campaign, and BET has always ranked us as one of the best places for Black families to raise children. So we think that that's part of it, but also the institutions of higher education, that pipeline, 135,000 students and undergraduates study, 50 different colleges and universities, puts us in the top 10 per capita for undergraduate students in America. I think that pipeline of talent also makes it a place where companies want to come and grow.
Do employees want to be there, though? And I ask in the context of the new abortion law from the Supreme Court and the overturning of Roe v. Wade. And it's a question that I've posed to mayors in other states that do have very restrictive laws now that Roe v. Wade has been overturned. Ohio is one of those states. Abortion illegal after a heartbeat is detected, which can be about 6 weeks before many women know they're pregnant. Are you concerned that that will prevent employees from wanting to relocate there?
It's one of those things that we continue to raise with our state legislature and statewide office holders and members of Congress as well. I mean, we know that for Columbus to continue to drive Ohio's economic recovery and grow our economy as a community, we need to be welcoming, and we need to be able to attract people from not just around the state, but the country and the world. And we believe that the Dobbs decision and then the actions taken by the state legislature can have a chilling effect on talent. And so it's critically important that we continue to advocate and push to make sure that Central Ohio, Columbus in particular, is a welcoming, accepting, safe place for people from all walks of life.
Well, when I think about you get up every morning, there's probably so much on your plate. What is top of mind for you? Especially in an environment where we've spent today just talking about the laundry list in the United States, more really globally in terms of, recessions, higher prices, concerns about what's going on in the U.S. Supreme Court. I mean, It just feels like the war in Ukraine. It just seems to be coming at us from all angles. We see that concern and risk and volatility play out in the financial markets. So top of mind for you?
I think the next 10 or 15 years in Columbus will be some of the most consequential in our city's history. I think 100 years from now, we'll look back at this 10 or 15 years. Did we embrace growth? Did we go about it in a thoughtful, dynamic, and inclusive way? Housing has been a huge issue. We haven't had enough housing units coming to market since before the Great Recession, and that issue has just greatly compounded over the last 12 years. And now with Intel and so many others, we grew by 100,000 people in 10 years. We're going to grow by 200,000 probably in the next 10. And so we need housing. And luckily, we have the public sector, the private sector, higher education, everyone working together to make sure housing is our number one priority.
I got to tell you, Carol, we were driving through Columbus.
Yeah, you know this area well.
Yeah, my wife is from Cincinnati. We drove back and forth between Cincinnati recently. We were driving through Columbus just a few weeks ago, and she said, "This is unbelievable." She went to Ohio State. She said, "All of this, when I was in college, was corn." And I mean, I'm talking about areas that are now, homes, office buildings, new highways that have been built. How do you do this, though, in a sustainable way? You did mention that housing is even an issue, and we're talking about a place that does have quite a bit of land.
Yeah, it's really important that we act aggressively and bring public and private. One of the things I've called for in my State of the City this year was to double the number of units coming to market at every price point, because we need housing at every price point every year for the next 15 years, and collectively invest $1 billion into housing over the next 15 years so that we can grow that way, dynamically, but inclusively, and thinking about that lens of equity. How do we make sure that the people who have made our city and our neighborhood so special and so great are able to age in place, and where young families can raise children, and be able to afford that? We believe strongly that if you work in our region, you ought to be able to live there too. And that's important for not just CEOs, but also for bus drivers and teachers and cops and firefighters.
Well, how has your kind of broad think about the economy, certainly your economy specifically, how has it changed post-pandemic, or how has the pandemic impacted it?
Well, it's a real challenge. So only about 1% of local governments in America are funded by income tax. 80% of our general fund, cops, firefighters, public health, folks on the front lines, those people are funded by income tax revenue. And remote work clearly has turned things on its head. Whether a third of folks are going to be returning, may not return at all, maybe in a hybrid. So that's a challenge for us, and continuing to figure out how we can plan for the future and invest as we grow as a city when income tax revenue is so up in the air. So we're working with the governor and the state legislature and others, not rushing into anything, but looking at the data and how, income tax revenue and the taxation system overall has been impacted by the pandemic, because we know that the cities in Ohio drive Ohio's economies, and folks understand that regardless of their party. And so for these cities to continue to grow and thrive, they got to be attractive places for people to live.
So if you could enact something new when it comes to income tax policy, what would it be?
I think looking specifically at the data and seeing how folks who are working in a hybrid or maybe come to the office a few times a week, how that revenue could be shared among several different municipalities in partnership with the state to
so
make
fractional
sure
ownership of some of the
basic
tax.
city services. And the most important thing right now is let's not rush into anything. Let's not make decisions until we have good data, good information to base the rationale and decision making. And we're working with our folks already with that, our major employers across the state as well, because they need great cities to attract top talent as well.
You're in your second term as mayor of Columbus. You were on the Columbus City Council starting in 2007. You were president of the council a few years later. What about your ambitions beyond mayor? What's next?
I think this is the best job
You
I'll
can just
ever
share
have.
with us.
Yeah,
Come on,
yeah.
it's just a few of us talking.
I am a local public servant, and I appreciate what people do at the state and federal level. But the impact you can have on the local level as mayor, and certainly inspired by Mayor Bloomberg, he put me through the City Leadership Initiative and Institute just upstairs here a few years ago before the pandemic. It was an incredible program to be part of in partnership with Harvard and others. And so mayors are really having significant impacts, not just around our country, but the world. Half of the world's population live in cities today. I think 25 years from now, 75% of the world's population. So if you want to drive change and reform and innovation, you really can do that at the local level and have far more impact than other folks in different levels. This is where my passion is.
Well, it's I agree. I think, so many cities are forgotten.
And you're not even a mayor, Carol.
No, I'm not a mayor. And I know we have our global city leadership program, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and, of course, Bloomberg Radio. But I do, we forget on the local level, and sometimes I feel like on the federal level, we're just not seeing what's going on and what's needed. First and foremost, you talked about housing. What else is needed for your city?
Well, continuing to invest in safety, neighborhood safety, and that isn't just law enforcement. Nobody has been more negatively impacted from COVID and the fallout from COVID than young people. There is more mental health challenges. There's more problems with youth violence and mental health. The amount of suicides amongst young people, and so really trying to think about a restorative investment that we can make over the next couple of years to prepare these kids, help them deal with the trauma, the isolation, the depression of the last few years, but prepare them for the jobs of Intel, in Hyperion, and Google, and Facebook. I think those are some of the things that really are going to continue for us to focus on in the years to come.
I agree, and I feel like we talked about it so much during the pandemic. I'm so nervous that we're going to forget mental wellness and well-being, and that it's going to go to the wayside. Having said that, I do want to ask you about one other thing that was a big topic, and we talk so much about a recession. How much do you and your team talk about concerns about a U.S. recession and the impact it could have on your city?
Well, we are very excited about some of the changes that have been made.
Great investment money coming in.
Oh, the rescue plan dollars, the bipartisan infrastructure deal, the Inflation Reduction Act. There's so many great wins for cities and local governments. I don't think we've ever had a better partner as far as an administration to local governments and cities than we currently have, taking the lead on a lot of these issues so that we're able to fund more police officers, build more bridges, and invest in our infrastructure, continue to partner on things like housing and economic
development. So recession talk,
fronts.
how often do you talk about it?
We're always prepared. When you're a mayor, you're prepared for anything, especially after the last couple of years.
Are you more prepared than you were than maybe a few years ago?
Well, I think having the rainy day fund and a healthy balance there, having the rescue plan dollars and the other support from D.C. has made it helpful. We're one of the few cities in the country that has a AAA bond rating from all three rating agencies. And so we're prepared and we're bullish on the future. We think that Columbus's economy is going to continue to grow because of our talent and because of our partnership and collaboration.
But we could have a recession maybe next year?
The sun is always rising in Columbus, and so that's what we've got our eye on.
Gosh, a pleasure. Really appreciate it. Mayor Andrew Ginther, of course, the mayor of Columbus, Ohio, here in our Interactive Broker Studio.
Let's send it over to Doug Krisner, who's standing by for a Business Flash. Hey there, Doug.
Hey, Tim. Hi, Carol. So we were weak across the board in the equity market, but we finished well off the worst level of the day. It was really a story about rising Treasury yields. If you look at what happened here in the States, at the long end of the curve, the 10-year right now, I have it indicated in late New York trade up 24 basis points to 3.92%. A 2-year at 4.33% with a gain of more than 13 basis points on the day. And that in turn strengthened the dollar quite a bit. The Bloomberg Dollar Spot Index was up about 1% today. The trigger for a lot of this activity was the Bank of England attempting to calm nerves by pledging to raise rates as much as necessary to control inflation. Those tax cuts announced by the British government last Friday really have engendered fear of a much higher rate of inflation in the UK. Some in the market are now saying that the BOE has no choice but to be very aggressive next month, and some are even betting on a 200 basis point rate hike. The dollar today, as I indicated, rallied, but if you look at the flip side, a much weaker British pound at $1.688. In terms of equities, the Dow down 1.1%, S&P 500 off by 1%, and the Nasdaq comp weaker by 0.6%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much for that update. Well, we mentioned fall is underway, which means things like football, kids back in school, the new round of Supreme Court cases. There's a lot going on. And I believe later on this week, there's another hearing by the January 6th committee that's investigating the U.S. Capitol attack and the role that groups such as the far-right group known as the Proud Boys played in the takeover and protest of the U.S. Capitol. So perfect next guest.
Yeah, we're very pleased to have with us Andy Campbell. He's an investigative reporter for the Huffington Post, HuffPost, my former place of work, and Andy, a former colleague of mine. He's also the author of the new book. It's called We Are Proud Boys, How a Right-Wing Street Gang Ushered in a New Era of American Extremism. Andy joins us right now in the Bloomberg Interactive Brokers studio. Andy, good to have you with us. Congratulations on the book.
So happy to be here and good to see you again, Tim.
Yeah, it's good to see you as well. Take us back to 2016 here, and the genesis of the Proud Boys goes back before 2016. But as you write in your book, 2016 was a very important moment for the Proud Boys.
Right. During Donald Trump's rise, a reactionary talk show host named Gavin McInnes, who was also co-founder of Vice Media, he sort of gets kicked out of Vice Media for his awful rhetoric with the company. And he takes his audience with him, starts his own show called The Gavin McInnes Show, and doubles down on this misogynist, bigoted rhetoric. And to his audience, he's pelting them with bigoted tenets. One of his tenets was to, quote, venerate the housewife. He thought that women and women in the workplace were responsible for the end of masculinity. He also gave them a tenet to accept that white men were responsible for the success of Western culture. So he's pelting them with these sort of white supremacist ideologies, and he takes that audience and decides, I'm going to activate these guys. I'm going to build them into a gang. And he called them the Proud Boys, and he told them, you are going to take Trump and the GOP's grievances, and you're going to get out there and do what the crusty old hats of the GOP won't do and fight them out in the street. And, 6 years later, they've been involved in so many acts of political violence over the years. I mean, these guys were involved in Unite the Right attacks in cities across the country, and of course, their outsized role in the January 6th insurrection. So his small-time gang that started here in New York City came to be known as the national architects of January 6th.
Andy, help me out here, because I feel like extremist groups have always been with us, right, in our U.S. culture. And yet, I feel like you didn't necessarily hear about them, or, and this is a group that's out there, and you think about the impact that they've had on our culture and our society. What's different?
Well, the Proud Boys were smart. After 2017, the Unite the Right rallies of Charlottesville, which they had a hand in, they realized that just being, sort of a fighting hate group wasn't going to last very long. A lot of the groups that took part in the Unite the Right rallies dissolved immediately after that because people were like, those guys are Nazis. And the Proud Boys got a new leader named Enrique Tarrio, who was very well connected in the political scene in Florida, so connected, in fact, that he was friends with Roger Stone, Trump's top confidant. Enrique Tarrio told me he realized we needed to become a more political machine if we're going to position what we want to do, which is the violence, right, as something, regular Americans on the right will see as patriotic, as defenders of Trump against what they describe as the leftist threat in the street. And so he turned them into a more political monster and positioned what they do as protected speech and patriotism.
Where are you seeing the rhetoric that you write about in this book seep into American political discourse inside Washington, D.C.? You hear a politician speak, and are there cases where you say that is something that I've heard from Gavin McInnes?
I think Gavin McInnes echoes the GOP and vice versa. I mean, Gavin pushed anti-immigration, anti-Muslim rhetoric, and what he wants them to do, and what they have done in the years since Gavin has kind of stepped aside, is that they take the GOP and Fox News's rhetoric as marching orders. So, for example, over the summer, the Proud Boys have been going to drag queen story hours across the country and showing up to intimidate people. They showed up to an event in Nevada at a public library that had been going on for years, but one of them brought a rifle and started making their way toward the door. Parents and children screamed and ran. This is happening at a rapid clip, but it's no surprise that Fox News all summer has been railing against LGBTQ, against drag queens, and you know, characterizing them as groomers, as coming for your children. And so it mirrors the rhetoric where the Proud Boys are looking at you know, Fox News and Donald Trump and saying, this is what we need to go out there and put violence to.
Which makes me wonder, you know, could the Proud Boys be possible without Fox News or without Donald Trump, or vice versa? Could Fox News and Donald Trump, you know, hold on for a second, because we have to do some news, but we want to come back with Andy Campbell, investigative reporter for HuffPost. He's got a new book out. Everybody's reviewing it and writing about it. It's really a book of our times. It's entitled We Are Proud Boys, How a Right-Wing Street Gang Ushered in a New Era of American Extremism, and it's certainly something we will be talking into the midterms and beyond.
All right, in the meantime, let's get a check of the latest world and national news. For that, we go to Washington, D.C., and Nancy Lyons, who's standing by. Hey, Nance.
Thanks, Tim. The state of Florida is suspending tolls in several areas along the Gulf Coast as residents begin evacuating ahead of Hurricane Ian. The storm is expected to make landfall near Tampa as early as Wednesday. Here's Governor Ron DeSantis.
This is a very big storm. It's about 500 miles wide, which is certainly on the bigger side as hurricanes go.
DeSantis says 5,000 National Guard troops have been activated ahead of the storm. At 7:14 p.m. Wall Street time this evening, NASA officials say their robotic spacecraft is programmed to ram itself into the moon of a distant asteroid.
This particular asteroid is not headed for Earth, nor is such a crash imminent. Lindley Johnson, planetary defense officer at the Space Agency, explained at a briefing earlier.
This is the first time we demonstrate that we have not only the knowledge of the hazard posed by asteroids and comets that are left over from the formation of the solar system, but also have the technology that we could deflect one inbound to impact the Earth.
Johnson said a variety of techniques are under study because asteroids come in a variety of sizes, speeds, and trajectories. In Washington, Irv Chapman, Bloomberg Radio.
President Biden has been celebrating the 2021 World Series champs today at the White House. Atlanta Braves chairman Terry McGuirk thanked the president for the invitation.
Mr. President, we have a very young and very talented roster, and we hope this isn't a one-and-done visit to your home. In short, we plan to be back.
Biden called McGurk's team one of history's greatest turnarounds. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. We're standing by with Andy Campbell. He's investigative reporter for HuffPost. He's also the author of the brand new book. It's called We Are Proud Boys, How a Right-Wing Street Gang Ushered in a New Era of American Extremism. Andy, when you and I were working together at HuffPost, you were not writing about the Proud Boys. You were not writing about American extremism. How did you come to start writing about it, and why write this book?
I was a street-level crime reporter back when we worked together, and I covered acts of violence across the country. During Trump's rise, those acts of violence made their way into politics. Through the rise of Donald Trump, we saw any number of extremist groups coming together under the banner of Trump, thinking that they had an ally in the White House. And the ones that stood out to me were the Proud Boys, because these guys wanted to be lionized for their violence. They wanted to talk to the press. They were proud of what they did. And so, you know, focusing on them turned out to be a good bet, because now they orbit so many acts of political violence, including January 6th. And so as January 6th was happening, and as they continued their violence, despite a lot of their leaders going to jail, I realized that this is the warning shot that we need to write, that going forward, this cycle of political violence held aloft by the GOP and media is going to continue. And so that's why I wrote it.
Just got about 30 seconds, and then we're going to do some more news, and we'll come back and talk some more. But is there a typical demographic of an individual who is a Proud Boy?
Proud Boys are of a lot of ideologies. There's neo-Nazis and people of color within them, but the majority of them are white guys who are angry and want to fight out Trump's grievances.
How much is also that they feel like they've just been left behind in this economy?
I think there's an element of that, but again, it's the violence that they're aiming for through those grievances.
Yeah, it's pretty striking. Hey, we're going to continue this conversation. Andy Campbell's going to stay with us. As we mentioned, he's investigative reporter for the HuffPost. His new book out, We Are Proud Boys, How a Right-Wing Street Gang Ushered in a New Era of American Extremism. Our conversation will continue in just a moment right here on Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It was all about rising interest rates today and a much stronger dollar, with the Bloomberg Dollar Spot Index up about 1%. A lot of the early action was driven by the Bank of England attempting to calm nerves and pledging to raise rates by as much as necessary as a way of getting inflation under control. You'll remember last Friday when the British government announced those tax cuts, markets viewed those cuts as being inflationary, and immediately many players in the market began betting on an aggressive rate hike from the BOE in November. Today we had yields up across the curve in the U.S., but in Europe as well. In the UK, the yield on the 10-year gilt rose 41 basis points to 4.23%. Stateside, we had the 10-year Treasury rising 23 basis points, last quoted in New York trading at 3.92%. At the shorter end of the curve, the 2-year Treasury at 4.33%, with a move up of something greater than 13 basis points. There's going to be a heavy flow of Fed speak this week. We'll hear from 13 unique Fed speakers during 22 separate events. This morning, the head of the Boston Fed, Susan Collins, said additional Fed tightening is necessary to rein in stubbornly high inflation, and she went on to say the process will require some job losses. Today, Dow Industrial Average giving back 1.1%. The S&P was down 1%, and the Nasdaq comp weaker by 0.6%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Want to get right back to our guest, Andy Campbell, investigative reporter for HuffPost. New book out, We Are Proud Boys, How a Right-Wing Street Gang Ushered in a New Era of American Extremism. Andy, so good to have you here with Tim and myself here in studio. As I was thinking about you coming on, listening to you talk, I mean, is this our Ku Klux Klan in terms of our times Ku Klux Klan? Is that how we need to think about it?
There are absolute comparisons to be made. I mean, this is a force that is racist at its core. They've made inroads with politics, and they've made inroads with the American public. But with the Klan, you have to remember, the Klan didn't lose power because people rebuffed them. The Klan lost power because so much of the American public shared that ideology that they weren't really needed anymore. And that's the fear going forward with these guys, is that enough people are going to see political violence as a normalized option in politics that the Proud Boys may not be needed.
You say racist, but it's not all just white members.
Right.
All Proud Boys are not just white.
I get asked about this a lot, and the Proud Boys, first of all, they're racist at their core, right? Gavin gave them a tenet that they have to accept if they join. Anybody can join, but they have to accept that white men are responsible for the success of the West. And there are people of color. There are also neo-Nazis in the Proud Boys, but they are all gathering under this banner of getting to fight out their rage in the street against the left and against Trump's opponents. And that can create strange bedfellows. Just last weekend, Nazis joined Proud Boys in Texas for a drag queen story hour event they were protesting. And also, on top of that, the very few people of color that are members of the Proud Boys are held aloft constantly by the Proud Boys as evidence that they're not racist, they're not white supremacists. And that has served to put a veil in front of them when they're confusing the media and law enforcement.
Hey, Andy, over the summer, back in June, we saw footage emerge from Idaho about the Patriot Front gathering to protest an LGBTQ event. And I'm wondering where the relationship is between Patriot Front, Proud Boys, and other sort of right-wing extremists. Help us kind of untangle that web.
Right. This is a machine and a cycle of extremism that we're seeing in front of us right now. For example, QAnon conspiracy theorists and Alex Jones type plant a seed that satanic pedophiles in the form of drag queens are coming for your children. Donald Trump and Fox News sanitize and grow that seed for their audiences, push it out to millions of people, and then the extremist street groups like the Proud Boys, Patriot Front, Oath Keepers, who are also big on January 6th, come to burn it all down. And so the Proud Boys, I see them as both normalizers of political violence, but also the pointy end of this extremism machine. Now, if you lop off one of those parts, there is somebody there already ready to take it on. And the scary part about what we're seeing now is that everyday Americans are joining these extremist groups in the streets. And so you are seeing...
How big are they?
I would say they're in the 5,000 to 10,000 range. They may have been bigger at one point, but people ask, well, why should I worry about them if they're not going to knock on my door one day? They have been known to do door knocks, but their threat lies in their ability to coalition build. They can gather many extremists and everyday Americans together under one banner wherever they are in the country.
Were you afraid doing this at any time? Because you were embedded right within.
I mean, certainly writing for HuffPost, I've gone, I've been in face-to-face with Proud Boys over the years. Originally, they weren't a threat to me because I'm a white guy, and they don't think that they can intimidate me. It's true, and but now I've gotten married to a fellow extremism reporter, and now that she's in the picture, we have received some threats because they see a woman, or whenever they see a person of color, they know that they can add an intimidation factor in there. So not before, maybe a little bit now.
Can you talk a little bit about your reporting and how you went around about reporting this over the last few years?
Yeah, I mean, we were covering their rallies, kind of from day one. A lot of them happened in Portland, Oregon, a liberal town where they believed that they could kick the hornet's nest in terms of leftism, and they would show up for MAGA events is what they called them, wait for leftists to come out and then track them down and beat them into submission. This was ongoing, and we were shouting it from the hilltops over and over. But I don't think it was until Donald Trump sits on stage and says, "Stand back, stand by" at the presidential debate in 2020, that most Americans knew about their violence.
What was that moment for you as a reporter who covered this? I mean, did that legitimize the Proud Boys movement?
I mean, it certainly made them feel that way. You can argue that Trump didn't intend to activate the Proud Boys with that.
And he was specifically asked to disavow them, if I recall correctly.
And he did not. He blamed the left and then said, "Proud Boys, stand back and stand by." But the Proud Boys took it as marching orders, and they started gearing up for what they called, on a blog post, civil war, their last stand for Trump on January 6th. And Trump's inability to rebuff them is just indicative of the GOP's embrace of them. I spoke to Roger Stone, sat down with him last year, and he admitted to me that he'd been advising the Proud Boys through their political ambitions for years.
Andy, before we let you go, there is sort of a silver lining to this entire coverage. You mentioned that you met your wife, who is a fellow reporter on extremism. You met her at a neo-Nazi rally?
Yeah, Unite the Right. In 2017, we were both reporting for competing publications, and we are, from that day, just recently we got married in France, and, love at a Nazi rally, a hopeless place.
The story you can tell your grandkids. Hey, just quickly, 30, 40 seconds here. Based on your reporting, based on what you learned about the Proud Boys, is there some conclusion as the January 6th committee continues to do its investigation about some connection between the Trump administration, the White House at the time, and the Proud Boys? Go quickly.
Well, not only did Roger Stone tell me he'd been advising them for years, but I'm interested to see their sedition trial coming up this winter, because Proud Boys have already agreed to testify against their own, and we may learn a lot about their relationship to Donald Trump and the people around him. Certainly, they've been doing security for top-level media pundits and politicians, so we're going to learn a lot this winter.
Well, we learned a lot in talking to you and through your book. Andy Campbell, thank you so much. Investigative reporter at HuffPost. His book, check it out, We Are Proud Boys, How a Right-Wing Street Gang Ushered in a New Era of American Extremism. If you missed it, it'll be on our podcast and in our weekend show. For the Bloomberg Business Week team and Tim Stanovic, I'm Carol Masser. Have a good and safe evening.